what's up? Welcome to Digital Bags. I'm Sean Smith, and today we are going to go on a deep dive through what I think is a war on crypto. These central banks, these financial institutions are holding innovation back. Governments are holding. Someone is holding all this shit back, and I'm going to show you what they're holding back and possibly why they're holding it back. With that being said, guys, this is not financial advice. This is just my opinion, just one man's opinion on the state of the crypto digital asset industry and really, just my take on what I think is going on and where I think it's all going. So, with that being said, guys, I'm just going to get right into it. Here on the screen behind me, you've got basically the total crypto market cap. We're sitting at $1.365 trillion dollars, which is down from $2.57 trillion dollars, which is a huge, huge drop. If we take a look at the daily, we could actually measure that out from the top here at let's give it 2.57 trillion. We are down. We actually went down 56%. Currently, we are down 46%, which is absolutely insane when you think about it. That's trillions just left the market, right? So it's like, where did it go? You know what I'm saying? I wish I could pause this. I gotta let my dog out. One sec. Crazy, crazy, crazy life. Okay, so let's just get right into it. As you see, we're in a major pullback mode, but I do think we are on that launch pad. We are about to spring back up. Okay, nothing goes up forever, nothing goes down forever, right? This is the most volatile market in the world. So if you can't handle the heat, right, get out of the kitchen, get out of the market. The crypto space is not for you. Okay, so what I want to go over today, quickly. All right, guys, I don't know if you heard this news, but rest in peace, John McAfee. Um, Supposedly he was found dead in apparent suicide in his jail cell where he was in, I think it was Portugal or somewhere around there. But anyways, he posts somehow this got posted today. But I just want you to take a listen to this quick.
I'd like to talk about the war that we're all engaged in, whether you see it as a war or not. It is in fact a war. Banks have declared war on us by denying us the ability to use credit cards to purchase crypto. The government has declared war on us. The SEC is trying to abscond with crypto as if it were securities, which it is not. We're in war. What can you do? What can we do? Take action. Write your congressman. It sounds silly, but while they are still in power, make the bastards work. Go into your bank and demand that they allow you to take fiat currency from your crypto accounts and deposit in the bank. If they say no, say, can you recommend a bank that would? Demand the credit card companies accept payment for crypto. Believe me, they're still in business. If people start abandoning writing letters, walking into banks, and more importantly, writing the Security and Exchange Commission and demand that they leave us alone, because we are not a security. We are coins. We are currency. They are frightened of us. Please do something. Thank you.
Right, guys, so take that for what it is. And again, rest in peace, John McAfee. You may be sending out a little message there. So, what I want to get into, with that being said, is what he was talking about, right? It seems like there is a war, some kind of a financial war going on between the old legacy system and this new digital asset system that's coming up to the forefront. And really, these bankers, they can't stop it, so they're trying to figure out a way to be relevant going forward in this new digital space. So, with that being said, I do believe that they are somehow holding back, delaying this new innovation, this new paradigm uh, from coming true before they're able to, stick their little hands in there and get their cut. How are they going to get their cut? Well, I do believe that these CBDCs that central banks are putting out has a big something big to do with it. A CBDC is a central bank digital currency. Over 80% of the central banks in the world are looking at adopting central bank digital currencies. Um, that's for another video. But what I want to get into is right what the financial system looks like right now. If you've ever heard of Swift, okay, Swift is what the financial is the basically the financial rails. Ever since the back in the 70s, they came out with Swift. It's the Society for Worldwide Interbank Financial Telecommunications. All right. So basically, it's a network that enables financial institutions worldwide to send and receive information about financial transactions in a secure, standardized, and reliable environment. Okay, so Swift also sells software and services to financial institutions. Remember that. Much of it is for use on the SwiftNet network and ISO 9362, which is a standard. The BICs, if you've ever said to check, you need to know what your BIC is, your bank identifier code. Okay, so those are the Swift codes. So to put it in a nutshell, Swift transports financial messages in a highly secure way, but does not hold accounts for its members and does not perform any of the clearing or settlement. Okay, so Swift does not facilitate funds transfer. Rather, it sends payment orders, which must be settled by correspondent accounts that the institutions have with each other. Each financial institution to exchange banking transactions must have a banking relationship by either being a bank or an affiliate itself with one or more so as to enjoy the particular business features. So basically, Swift is an old school legacy system that the banks still run on. And this is what the digital assets are trying to take over, specifically one, XRP, and Ripple, who is behind, kind of behind, who is pushing XRP out there into the world and making um, this new digital decade basically come to life. And I'm gonna go through that, and I'm gonna kind of make this into a series because there's so much shit that's going on behind the scenes. But I kind of want to give you a little bit of a clip it today, okay? So just so you understand what Swift is, and this is what the banks are trying to protect. Swift is the reason why money moves so fucking slow today. It is the reason why it takes 3 days for your payments to settle behind the scenes, which is why we pay so much in interest charges and transaction charges, and all of that goes to the banks, right? Because they're basically the ones holding the risk until it is settled. And like I said, Swift can't settle it for 3 days. Okay, I'm gonna get more into that, and hopefully, if you stuck with me this far and you're kind of, trying to understand where I'm going with this. But with that being said, who's taking over Swift? Like I said, XRP and Ripple. Right now, as of now, Ripple is in a lawsuit. Okay, so if you just type in Ripple SEC lawsuit, you can look up the lawsuit. They've been in the lawsuits just before the start of the year. Okay, so there's a lot going on. The SEC basically sued Ripple. Okay, their former chairman, um, uh, what's his name? Clayton, former chairman Clayton. What's his name? Can't remember his name right now. Having a brain fart. But anyways, he placed a lawsuit down on Ripple, and then the very next day, within 12 hours, resigned early from his position as chairman of the SEC and left it to the next administration who's coming in to settle with it, to deal with it. And as of now, this has been going on since just before last Christmas. Ripple and their lawyers are making the SEC look like absolute retards, okay? They are making them look stupid. They are making them probably wish they never set this lawsuit down, because it is turning the tables and is turning against the SEC, and it's actually digging up some things that really need to be brought into the public view, okay, for everyone to really understand what's going on. So is the SEC slowing down this new digital age? Are they slowing down this innovation with this lawsuit? Hell fucking yeah. All right. So what I want to kind of give you right now is why I think XRP and Ripple are so relevant and so important, and I'm going to give you some evidence why others who are worthy of taking their their ideas, their reputations, and they're putting it behind Ripple, and I'm going to show you just a couple of them. All right, so check this out. This is Rosie Rios, okay? Rosie Rios was the 43rd Treasurer of the United States. Check this out.
What do you think about cryptocurrency as a form of currency?
Well, I think the train's already left the station in terms of cryptocurrency. You may or may not know that I just joined the board of Ripple, and the reason why I chose to join that board, it's, in my opinion, one of the few cryptocurrency options out there that has a credible and legitimate use. So financial institutions use it to settle cross-border payments.
All right, so you heard it from her. This was a few weeks ago. She just joined the board of Ripple. Rosie Rios, the 43rd Treasurer of the United States. She has her money on over $1 trillion worth of the currency on the $100 notes. With that being said, I'm going to show you a next little video. This was done in 2014. Okay, I'm going to skip it forward a little bit just so you don't have to hear this all. But what her job was when she was the treasurer. Just take a listen.
And obviously, the numismatist community is something. Numismatic community is something that we honor, something that we treasure, and something that we will continue to support in every way that we can. So, thank you for what you do. Just a little bit about what I do. So, I oversee the Bureau of Engraving and Printing, where we produce our currency. I also oversee the U.S. Mint, where we produce our coins. That also includes custodial responsibility for our gold reserves. So, Fort Knox is under me as well. All bullion production, all precious metal, platinum, silver, gold is under me as well. And I'm also a senior advisor to the Secretary on issues of community development. But I always look forward to getting out of D.C. and meeting real people, talking to real people, and continuing the interest that we have here, not just in the products of coin and currency, but what they represent. And I say this all the time. One of the reasons why I explicitly chose this portfolio is I still believe that coin and currency is the way that we institutionalize our history, the country's history. On every denomination of coin and currency, you will find a historic figure, a profile, a monument, an edifice that represents our nascent history of this country. So for that reason, and for that reason alone, is why I am very proud to be part of this portfolio, very proud to be part of these events that celebrate that same level of passion for our country's history. So thank you again for what you do. Just a couple of other quick updates. You may know that our new $100 note is in circulation. You may know that today we just started selling uncut sheets of that new $100 note. And just in the last few hours, there have been over $300,000 in sales for those sheets. So there is demand. It's great to see there is demand still for collecting these great works of art. Today will be the first time I ever sign an uncut sheet, so I don't know who that first person is, but you are very lucky. And I'm, again, very proud to be part of that. Making American history is what I call it. We are making American history every day. And for those of you who don't know, the Next Gen $100 note is the last denomination of that particular family of notes. We're working on the future generation of currency. So that is my other job, is I'm the chair of the Advanced Counterfeit Deterrence Steering Committee. So as the chair, I oversee the collaborative effort of designing future currency and all the security features that are incorporated into that. And that all goes to the Secretary of the Treasury for final decision. So I'm very proud, again, to be part of that process.
Do you think about cryptocurrency as a form of currency?
All right, so you already heard that. So that's the 43rd Treasury of the United States, overlooking the creation of new forms of currency. Just joins the board for Ripple. So take that for what it is, right? So now I'm just going to move on to Brad Garlinghouse. Brad Garlinghouse is the CEO of Ripple, okay? People calling Ripple a scam, people saying this and that about Ripple, you know, shitcoin, whatever it may be. Brad Garlinghouse, the CEO of Ripple, would not be sitting in meetings with Christine Lagarde, who is the president of the European Central Bank. This guy here, the chief executive of the Hong Kong Monetary Authority, sitting right beside him. This guy right here, the chairman of the Saudi Arabian Monetary Authority, sitting beside him. Right over here, we've got the director of the monetary markets of the IMF, the International Monetary Fund, the International Monetary Fund. So we're talking about high level people. This guy right here, you see the back of his head, is Augustin Carstens. Okay, he is the general manager of the BIS, the Bank of International Settlements. Okay, so tell me, why the fuck is SEC suing Ripple when Ripple, the CEO, is sitting in these kind of meetings with high level people? Just putting it out there. Think about it, okay? So while he was at this conference, I'm going to kind of give you a little lowdown. He was the last to speak. Brad Garlinghouse was the last to speak, but I'm gonna show you exactly what he was talking about here. So check it out. If you've made it this far in the video, congrats. I'm going to leave it with this. I'm going to let this play out, and maybe I'll make some comments on it after it's done. But just take a listen to this.
Not to issue a CBDC as well, because then you've left it to the private sector, and then you need to worry about the regulation of the private sector. But now we have someone from the private sector, Brad Garlinghouse, who is the CEO of the financial technology company Ripple.
I will start off by also thanking Charles, thanking Thomas, thanking Christine. It's an honor to be included. And as was introduced, I think they saved me for last so that I could talk about the private sector version of this. I also start by kind of explaining the basics of what Ripple is and what Ripple is not. Ripple is a private company. We're based in California, about 300 or 400 employees around the world. And we're trying to solve a problem. We're selling technologies to banks and financial institutions to solve a cross-border payments problem. To be clear, we have not focused on the central bank digital currency issuance. Our view is very much there needs to be interoperability globally. And even in a world of CBDCs, you still need interoperability to solve that problem. Also, before I dive in, my comments are more focused on kind of explaining how Ripple's approaching this problem as opposed to just CBDCs. But I thought it worth spending a moment on how we think about blockchain at large and why it is such an interesting technology and I think appropriate for central banks and commercial banks to be looking at. For me, the novelty of any blockchain technology is the ability for two parties to transact without trust, but with certainty. So today, anytime we transact, we are transacting through a central counterparty, whether that be a correspondent bank where Ripple is focused, or that be a Visa or American Express, what have you. The opportunity around blockchains is to change that dynamic, and I think many industries, whether it's payments, what we're talking about today, or securities, or even loans, any of those transactions, I think, can be disrupted and made more efficient through blockchain technologies. All right, so with that kind of brief introduction, I'll be brief on some of my comments here because we've touched on this already. I think we would largely have few arguments with the idea that global payments today have not caught up with the age of the internet. We talk about slow. We've talked about the 14 days that Norman mentioned. The younger generations today are accustomed to be able to open up their smartphone and click on a button and have an ice cream delivered in 20 minutes. they aren't going to be very happy when it takes their payments, days and lots of costs to get to them. Another thing that is, I think, often lost upon us is the opaqueness in the problems with which correspondent banking currently operates. There's a 6% error rate self-published that 6% of all SWIFT transactions require human intervention. Now, that doesn't mean they don't get there. It just means that human intervention adds time, it adds cost, and what have you. And lastly, when we talk about cost, it isn't just about transaction fees. It's also about the pre-funding required for commercial banks and even large corporations and the cost of that capital. What's amazing to me is that these costs are often borne or burdened the populations that are least able to afford them. Data from the IMF and the World Bank would say that the average remittance costs around 600 basis points in a world where we think about the internet enabling kind of real-time instant information. Why can't we use these new technologies to build an internet of value? When we look at the current dynamic I was just talking about, the pre-funding, if the correspondent banking network requires this pre-funding, I'm not talking about a central bank level as much as I'm talking about at a commercial level. And oftentimes, even when I'm meeting with senior people at various banks or financial institutions, they'll talk about their cost to fund into the Mexican peso, and they'll cite a very, very low number. But what that doesn't include is the cost of capital that's sitting at a bank there. It also restricts competition because it requires capital to get it there. Our view in the future is you don't have to have this pre-funding, and instead you can use a digital asset to have global liquidity on demand. Now, we build upon a tech stack of an open source technology called XRP. XRP originally was built by some engineers who had seen some of the flaws of Bitcoin and the challenges of scalability around Bitcoin. Where Bitcoin today, on a per transaction basis, it's rather slow and rather expensive. XRP is very, very fast, about 1,000 times faster per transaction and 1,000 times cheaper per transaction. The other dynamic, of course, of correspondent banking is some of the more quote-unquote exotic currencies, exotic corridors have been left to kind of stand on their own. And the liquidity in digital assets could be applied to actually make that much more democratized and a level playing field. Ripple's vision from the beginning really has been to apply these technologies in the same way that TCP/IP and HTTP are the technologies underpinning the Internet of Information. These blockchain technologies will be the underpinnings of an Internet of Value, where we have connected devices, we have connected information that will allow payments to flow. And as Norman was describing, if you're a large corporation moving $100 million, that's one thing. If you're a freelancer working in the Philippines doing design work for a company in London, and you want to get paid $30 or 30 pesos, Philippine pesos, that's not a transaction that can easily be enabled. And in fact, for the companies that enable that, they require the freelancer to set up an account, and they don't actually pay it out until there's roughly 1,000 USD sitting in that account, and then they would pay it out. So Ripple has come to the market with 3 products, and I will just briefly touch on them. The first one is called XCurrent, and the reason why I'll point this out is because XCurrent doesn't touch crypto. XCurrent is just kind of Swift 2.0. It's a messaging framework that is much more efficient and real time as compared to fiat to fiat. That typically is how we start working with any bank or any financial institution, is on a fiat to fiat basis. The bottom product we see down here is called XRapid, and XRapid is really where we use XRP to fund real-time liquidity. We brought this product to market in Q4 of last year, and immediately we saw the demand for that type of product from banks, financial institutions who want to open up new corridors for payments, but don't want to open up new nostro-vostro relationships and the friction and overhead that goes with that. The third product is really simply an API that allows corporates to do real-time payouts into this network we call RippleNet. The challenge here, as many of you may know, is there's corporations ranging from Uber to Amazon to less technically efficient companies. They employ hundreds of engineers that just integrate into payment networks around the world. They're building custom APIs into payment networks in the Philippines or Indonesia, into the Middle East, what have you, so they can enable those payouts. We think by standardizing on an open source API, we can make that more efficient for everyone. We've been fortunate, and actually, I meant to say up front, I had a very good conversation before we started this panel. One of the things I worry about when we talk about blockchain technologies is sometimes they are a solution in search of a problem instead of a problem in search of a solution. There's many times when people come and talk to me about blockchain solutions, and I ask them, why can't we just use a database? Why is a blockchain a better solution? And in Silicon Valley, where I've been for 22 years, sometimes it's catnip for investors. It's just to get investors excited, where a database would be more efficient. Now, the reason why I offer these remarks at the beginning of this slide is I think one of the reasons why Ripple has done well is we've been very focused on solving a specific problem for a specific customer, and we've been focused on that for a long time. And we've been fortunate, therefore, to get about 200 customers globally now working with us in one way or another. So I'll conclude just by saying I think the excitement around blockchain is well-founded. And it will impact many, many industries in the same way the Internet of Information 20 years ago has impacted many, many industries. But I also think sometimes that the hype gets ahead of the reality, and we need to be clear about what problems we're trying to solve, whether it's at a central bank level, a commercial bank level, or in other industries altogether. With that, I will turn it back to you, Charles.
Thanks very much, Brad. Well, I'd like to hear more about that. It certainly sounds promising, and I think we'd all like to know more about how, counterparty risk is avoided here, and the problems of foreign exchange liquidity. And I think that's a conversation that will continue. But I think next.